Hello, I'm Susan Cadeau. Thank you for being with us. As state lawmakers wrestle with the problem of filling a budget hole of at least $1.3 billion, religious leaders and nonprofit organizations are urging them not to balance the budget on the backs of the poor. Despite those pleas, legislative leaders say tough choices will have to be made to craft next year's budget, even if it means the state's most vulnerable may have to share in the pain.
Religious leaders met at the Capitol this week to deliver a letter to Oklahoma legislators asking them to preserve tax credits that support thousands of middle and low-income residents. The letter, signed by more than 140 clergy members, pleads with lawmakers to consider the human and moral implications of reducing or eliminating Oklahoma's earned income tax credit, the sales tax relief credit, and child care tax credit. The Reverend William Taberney, executive director of the Oklahoma Conference of Churches, says they're doing what the religious community has always done, holding civic leaders accountable.
We understand that there is a budget crisis. We understand that there are certain things that need to be done. But to take away some of the tax credits of the people who are the most vulnerable in our society is immoral.
Mitch Randall is senior pastor of North Haven Church in Norman. That church, like many others, has worked with food banks to provide weekend meals for children when they leave school on Friday. Randall says that burden will increase as schools increasingly go to 4-day weeks to deal with budget shortfalls.
The food bank will now have to provide meals for a 3-day weekend instead of a traditional 2-day weekend. This will increase their budget by 1/3 for this most important service they provide for the most vulnerable Oklahoma families.
Effie Craven is State Advocacy and Policy Director for the Regional Food Bank of Oklahoma.
With 1 in 6 Oklahomans facing hunger, 1 in 4 Oklahoma children without adequate nutritious food, and 16% of our population living at or below the federal poverty line, now is not the time to cut back on tax credits that help low-income working families.
Oklahoma Policy Institute Executive Director David Blatt says the 3 tax credits in question benefit more than 400,000 Oklahomans, including many working families who make $25,000 or less annually.
They would lose $200 of their state earned income tax credit. They could lose $200 from the sales tax relief credit, which is intended to offset the sales tax that we impose on groceries, one of only 5 states that do. And they would lose $100 from a child tax credit. So we're talking hundreds of dollars for families that can least afford it.
Governor Mary Fallin responded to the group with a prepared statement saying, "It is my desire to protect core services as much as possible for our most vulnerable citizens. My proposed budgets reflect that, along with past tax cuts, which let families keep more of their hard-earned money." One day after the letter was delivered, the Joint Committee on Appropriations and Budget approved several tax credit bills, including Senate Bill 1605, trimming a tax credit for child care providers, and Senate Bill 1604, which limits the amount people can get back from the Oklahoma Earned Income Tax Credit. Senate President Pro Tem Brian Bingman says they'll also be looking closely next week at tax credits for the wind industry.
They don't pay Oklahoma income tax. They're not Oklahoma corporations, and so we're trying to see what we can do to limit our exposure on the credits in the wind industry.
Bingman says more tough decisions lie ahead, including whether to bond transportation projects to free up money for the General Revenue Fund, something he takes a dim view of.
It's a good tool for capital projects, but just don't shift your money around and use it on one-time or for recurring expenses, because you're just going to create another hole for next year.
While the governor has called for $500 million in bonds and the House is considering $300 million, Bingman says the Senate would consider a limit of no more than $150 million in bond issues.